All 12 districts of the Federal Reserve System today were reporting modest to moderate economic growth in July and August. That's number one. Number two, the mystery over why tight labor markets are not moving wages and inflation only deepens with this report. So a few of the details here. Manufacturing on the positive side, modest increases in several districts. Consumer spending, in particular non-auto retail spending, was up in many districts. In addition, a notable note on the positive side, capital spending increased in several districts. Guys, you know that productivity has been an issue for our economy for the past several years, and any persistent increases in capital spending will only bode well for that. Now, a few more notes on this puzzle that's facing Fed officials over the contradiction between low unemployment and the lack of inflation. They're not going to get much help from this report. Several districts reported worker shortages on one hand. Firms in Atlanta, St. Louis, and Minneapolis districts, in fact, reported, quote, turning down business because they could not find the necessary workers. But despite all of that, a majority of districts reported limited wage pressures and modest to moderate wage growth. So you know that Fed officials are facing this decision of whether or not to move interest rates up again before the end of the year, and they've been puzzling over the lack of more inflation. This report is not going to help. It's going to leave them puzzling over that evermore.